What's up, Kabroda crew? Welcome in. Thanks for joining the live stream and checking us out again. Like I said, this will be our last one for a little while. We're going to be on a trip to Oregon for a little bit, you know, just visiting family, checking out the scenery and stuff like that. But yeah, we won't be back until the 14th. Actually, we won't be back probably... But we'll be back from the trip on the 14th, but for the live stream, probably 15th, maybe the 16th. We'll have to see, but definitely on the 16th for sure. So if you're aiming for a date that you're, wanting to know when we're going to be back, that's definitely a date to look for. But yeah, should be a nice little trip. So hopefully y'all are hopefully y'all are able to do a little bit of market analysis for yourselves for about a week or so before or a week or two before we're back. Hopefully we've taught you enough so far. But yeah, we can definitely do a little breakdown today, talk about some of the longer time frames, see what's going on, and see what's happening. Definitely interesting today. We didn't really do much of anything yesterday, kind of little up, little down. We ended up kind of running up a little bit, later in the day, but we didn't quite get up as far as we would have thought. Kind of hit that 200 that I was talking about on the live stream, and that was kind of it. Yeah, and then after that, we kind of just ran back down, basically set ourselves up right in the same area as we were yesterday, and opened up for today. So more or less same thing as yesterday. We'll have to get the levels on there, see what's going on. But yeah, not looking too much different. Not enough really happened to change, sentiment of yesterday. It's kind of the same thing. You're still wanting to look through the same kind of stuff. You want to have the same mentality as yesterday. There's not a whole lot different. So we'll go through, break it down. We'll probably look at a little bit longer time frames today, just to kind of break it down, see what's going on for the next 2 weeks or so, that we're going to be gone. See if we can't get a little bit of information to y'all. Obviously, we're not going to be able to predict anything or anything like that, but we can kind of give you a general idea of what's going to happen. Maybe, what we're seeing, what TA is kind of saying, that kind of thing. And we'll see what you guys think about it. You guys can let us know what your thoughts are for the next couple weeks. And yeah, we'll go from there. So first off, let's head on to the Kabroda.com, see what's going on. So here we go. We got our Kabroda.com pulled up. We don't want that. Kabroda.com is pulled up. We got BTC today at 58,500 level, basically the same area it was yesterday. Today we are bearish 5 out of 5. So far we are still building, so that's actually different from yesterday, actually, because yesterday we were exhausted, I believe. So kind of flipped a little bit. Just means we're building a little bit, maybe a bottom. We'll see what happens with that. Jewel is not lined up with us today, and the multi-agent system is saying stand down again today. We have a breakout level of 58,754 and a breakdown level of 58,176. There is a 1 hour long today that the system is calling. Just like I said yesterday, these are, something that we are working on actively, and so it's more to gather data than it is to actually call out stuff. So you know, it could be accurate. I'm not saying it's not going to be. It's just something we're still working on. So even for us, we're not really looking as this as something that we would actually take actively right now. It's more of just a, you know, paper trade to kind of check out and see how well the system's working, and yeah, improve on it really over time is hopefully the goal. So we'll go ahead and grab our triggers here though and throw them on our chart and see what's going on. Got our triggers, open up our little indicator here. We're going to Wednesday, throw our levels in there, and there we go. So we have our breakout level right here. Like I already said, it's around 58,754, around 58,800, I guess, really, if you wanted to round it. We have our 30-minute range sitting in the middle, and then our breakdown level at 58,176 down here. Both our resistance and support are outside of our lines. So that's, well, I guess it's good, but it kind of depends on how you look at it, I guess. But the resistance sitting up here at 59,447, right where we kind of came up and hit the 200 yesterday. And then below us, we have our support down here at 57,827. So, yeah, I mean, that's kind of how it's set up. Not really too much to say to that. 30-minute range is kind of in the middle, so that doesn't really tell us much of anything. You do have a nicer gap on the upside, so there's possibility of maybe more upside today, especially with how the price is kind of behaving right now. It is 830. The 830 to 845 candle still, so you know there still could be some volatility kind of coming into this market, you know, with the 830 open on the New York futures. So you know, play that at how it is. We do have a little bit of a run up, but that could also just be some volatility kind of coming in, and it will die off, and maybe we'll see some more sideways. We'll see. Yeah, overall chart is looking nice, honestly, for a little bit of an up run here. It's definitely setting up, ready to go. It's just if you are, you know, looking at this, you might be careful of that daily resistance at 59,442. Like we were saying yesterday, you know, our system is set up to trade in the way that our system is set up to trade. So, you know, maybe your system's a little differently. You know, ours is telling us staying down today, but maybe yours is saying, hey, you know, the market's good, it's time to get in. It's time to take a trade. So, you know, if it is, we're just trying to like help you out, give you some levels, you know, to look for, some things to watch out for, things to think about. As you're taking it and looking for targets and stuff like that, and hopefully, you know, kind of just, you know, give you a little different point of view on something. If you are trading our system, I guess you can follow along too, though, and just kind of maybe learn a little bit more about the system, learn a little bit more about our thoughts and how they go into it. But yeah, so that's why we're talking about that daily resistance there, though. We do have that 200 as well, so watch out for that. 59,250 around there on the 15,200, so something to be mindful of as well as you're taking that up trade to the upside. Yeah, overall not looking too bad. We do have that trade on the 1 hour, so we'll throw it on here just to see what it looks like. So we're getting in at 58,982. Basically, wow, okay. Gonna get in up here a little bit. Oh, this is so long. Yeah, it's so long. 58,982. There we go. Put our stop at 58,576. Around there. And target 59,413. Right there. So we have about a 1-to-1 on our 1 hour trade for today. So we'll see how that plays out. We'll just say, you know, whenever it comes up and gets us there, we'll get in. Yeah, it's pretty close. So yeah, I guess technically we're in for our paper trade. See what happens with that one. See what goes on. Looks like we got a couple people in here, so welcome in. Kathleen, welcome. Terry, thanks for joining the live stream. We're about to head on over and check out the market recap thing for today, or not recap, I guess, but the analysis for today. You know, from the multi-agent system, kind of see what it's saying about today's price action, see what it's saying about the overall structure, and see what's happening. So we'll head on there. Head on to Kabroda.com here. All right, BTC short structure is confirmed. Session box disqualifies execution. So BTC trades near that 58,422 with the 4-hour and hourly trend engines aligned bearishly, but no trades are issued today. Session opening range measures 578 dollars and 29 cents. $1 below the 1% minimum width required for this system to execute the sound structural risk parameters. BTC is 18.2% to the bear wave 4, a corrective bounce off the 60,055 wave 3 low. The structural ceiling for this bounce sits at 80,632 and the wave 1 market structure break, but for more immediate risk is at the wave's origin. A weekly close below 60,055 terminates the corrective phase entirely and re-engages the bear continuation sequence towards the wave 5 structural target in the 42,000 to 45,000 range. The weekly time frame has registered bullish divergence from deeply oversold conditions, not a directional reversal signal, but a structural warning that tells us that selling pressure is thinning, and any failed breakdown below the 60,055 carries violent counter squeeze potential before wave 5 can establish itself. All right. So kind of self-explanatory stuff we've been talking about for a while. We are kind of in wave 5. We have gotten that close below, so I'm not sure why the bots kind of, saying, or bots, I guess they're technically bots, but the AI is saying that we are below. It's saying that we haven't gotten the close below 60,055, but we have on the weekly, so I don't know why it's saying that. I believe we checked it out yesterday, but we definitely got to close below. So yeah, I don't know why it's saying that, but yeah, we're below that, so we're in bear wave 5. We're looking for that 42,000, 45,000 range for a target. We've been talking about it, more at 50,000. Like I said before, that's just because typically when you have a target that's really low, or high or whatever, it's just a target really in general. You're going to come up and typically you'll actually see a reversal right before you hit the target. So 50,000 might be a little high, but it's pretty close. It's more of a, I wouldn't say like guaranteed target, but it's a very high likely target. If we're targeting 42 to 45,000, you're more than likely going to hit that 50,000, like pretty likely. So 42 to 45,000, you might have those range, but you're going to be trying to catch the very bottom of the chart, so you're better to kind of jump off the train a little bit early and take some dough from that. Market sentiment for today. So the fear and greed index is registered at 11 out of 10, or 11 out of 100. That's a lot lower than yesterday. I believe we were at 17 yesterday, so we dropped down quite a bit, about 5 or 6 or so points down. So we're at an 11 out of 10, or oh my gosh, 11 out of 100. We're in extreme fear, historical depressing reading, or depressed reading associated with industrial accumulation activity. Total crypto market capitalization stands around 2.11 trillion with the 24-hour volume of 79.6 billion. Marginal capital inflow at plus 14%. Over the session, the sentiment reading is consistent with the bearish structural setup, but extreme fear at these levels also introduces the counterpressure risk the weekly divergence already flags. Fear-driven capitulation and structural breakdown are not the same event, and the distinction matters for extension trades. So today's energy, well, I guess kind of running over that real fast. Definitely looking for some downside with the fear and greed being that low, and stuff is kind of lining up with that bearish sentiment. However, being that low, it also tells us that we're getting ready for a reversal. That's definitely a reversal signal indicator. It's not something like you can just put a ton of weight into, like, oh man, once, like, right when we dip into the extreme fear, we're just going to go up. Obviously that's not the case, otherwise we would have not gone up, or we would have already bounced up, and we haven't even really shown that we're going to do that yet. So it's a good indicator, maybe early indicator, just something that's telling us, hey, watch this. There's a possibility that we might flip to the upside, or we are going to flip to the upside, but just when. That's really the better question. And indicators don't really tell you when something's going to happen, and they just tell you that it's going to happen sometime here in the future. And our indicator, obviously, for that point is telling us, hey, we're going to flip, we're going to go to the upside. It's just a matter of when is that going to happen. So for today, the 4-hour trend carries an ADX reading of 50.1 with a negative momentum. Trend strength is building to the downside on the dominant execution time frame. The hourly confirms directional alignment with the ADX of 33.3, also negatively oriented. The directional vote runs a 4 out of 5 bearish across primary time frames. In the macro backdrop, risk appetite suppression, dollar trending bullish, VIX elevated, reinforces the same conclusion. Single point of structural friction is the 50-minute time frame. The momentum is compressed with no confirmed directional velocity, creating ambiguity at the price time frame where entry would need to be resolved. So I guess that's a lot of words to say that we're kind of in the okay, that's just a whole mouthful to basically say, yeah, we're kind of in between a lot of different time frames. There's a lot of different differences between the 50-minute, the 1 hour, the 4 hour, all of those different conflicting points. So essentially, there's just not a whole lot of nice, a clean edge to give us to trade. That's why our setup, or our trading system today is kind of stand out. So for the setup for today, we and obviously it's vetoed, structural energy insufficient for a valid trade. Obviously we already kind of talked about that. So today we have 2 independent veto conditions fired simultaneously, either of which is sufficient to stand down. First, the opening range at 58 or 57. Wow, $578.29 is 99% wide. So we're not quite to the 1% gap. Well, it's 0.99% wide. So we're not quite to the 1% gap there. $1 below the 1% hard floor. Performance auditor established after 3 consecutive blah 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 blah. Essentially, we made that rule. A measured move inside the range cannot simultaneously absorb spread. Accommodate a structural sound stop at 58,639.19 and delivered meaningful risk adjusted return. Geometry is disqualifying. Secondly, the 50-minute momentum ribbon spread sits at a 33% with deviation from the mean at 1.26%. Momentum compressed across time frames with no confirmed directional velocity. Meaning price is structurally positioned to oscillate before committing to any direction. The stop at 58,639 sits only 0.79 ATR above the 30-minute high. Structurally tight against the time frame that has not been resolved in its own directional conflict. The daily momentum reading at a PMARP of 23.0%, and the weekly bullish divergence compound the counter pressure. The 4-hour and hourly engines are strong, but the divergence stack argues against trusting extension, and the unresolved 50-minute condition elevates pre-trigger stop pick-off risk to an unacceptable level. Yeah, that's a lot to kind of just say. Yeah, there's just a couple different indicators basically within our system that tell us not to get in. That's the basics of it, I guess. Yeah, that's just a whole mouthful right there. What would reopen the setup? So if the session reactivates on a confirmed break and retest of either trigger level that expands the opening range above $587 in total width, specifically the lower structural boundary at 58,176 to the downside, or the upper structural boundary at 58,754 to the upside. Simultaneously, the 50-minute momentum must resolve its structural ambiguity and show confirmed velocity in the direction of the trigger breach. Both conditions must be satisfied: range expansion without momentum resolution or momentum resolution without range expansion is not a valid trigger. So basically our thing would need to widen. Obviously that's not going to happen. It's set in stone after 8. So if it's not bigger than 1% at 8, it's not going to get bigger throughout the day. Obviously it's not going to change anything. You're not going to be able to trade. We are working on kind of boosting the system to kind of maybe alter the decision a little bit as that kind of stuff happens. But for right now, we haven't quite cracked that, so we found it's better just to have it hard set at 8, and that's what it is. All right, so for the performance, we don't need to read that. Yeah, all this is just kind of back end stuff. It tells you what's going on, and what's happened in the last 7 days or so, and then it, things to watch out for. So I guess we could read that. I get some water here. Just so you know, our 1 hour live, well, not live, our 1 hour, I guess, live stream paper trade did hit. So we just had, we got in here on the close of the predator lines. It took off one candle all the way up, hit us out at our stop. Actually, stop was right there at the daily resistance, but nice little pop on the market. Nice little trade. You would have made a 1-to-1 there if you had taken that. So you would have made $100 on $100. Not too bad. Or technically you'd make 200, but you minus the initial 100 you put in, so you would have made $100 gross on that. You would have to take out trading fees and stuff like that too, but pretty decent little trade there, so not too bad. Yeah, it's getting better and better. Like I said, it's still in the works, so obviously this is great. It's worked out this one time, but we're still working on making it better and better. For the normal system's pretty dialed in, but the 1 hour and longer time frames that we've been kind of working on having differences in, that is still in the works. So yeah, nice to see that it worked out though. Yeah, overall though, looking like a, I don't know, pretty nice little day. That could have been it for the trade today. With the with the daily resistance being right there, that could be the end of the trade. Kind of came up and smacked right into it, which is, great for the trade. But in terms of, how much higher is it going to go? I don't know. It could go a little higher if we break this 1 hour resistance. We could go up and test the 60,000 level. But I also could see it, reversing right here on the 1 hour resistance, just because it's the, not the 1 hour resistance, the daily resistance. We could just reject here on the daily resistance, just because it's the daily resistance, kind of how it works. There's a pretty major resistance right there. The levels that we throw on there are by math, so they are pretty important for the day. So we definitely could see a rejection here after running into that level. We're just looking for price to kind of trade out for the rest of the day. Again, we are in stand down, so nothing too interesting for today. Going out and looking at the longer time frames, the weekly is still looking pretty nice for the drop down. Again, we are targeting around that 42 to 45,000, 50,000 level, what we're looking at. So definitely have a lot of room to go to the downside. That's kind of what we expect to happen in the next couple weeks. With breaking the 60,000 level and getting a close below, we should see a continuation down below into that 50,000, 42, 45,000 level. And yeah, that's kind of what we're expecting. If you're asking, why are you expecting that? If you haven't been around for a while, basically we are using the Elliott wave to kind of figure out, longer term time frame, where are we going to go. Elliott wave, when you use it, you want to basically you're finding the highs and the lows, and typically you'll see 5 high and low, 5 like waves, I guess you could say. So like 1 would be the down wave, and then 2 would be an up wave, 3 is the down wave, 4 is an up wave, 5 is the down wave. If you're going down, obviously it's the opposite if you're going up. But you want to find those. So you want to find your high and low. You want to find your high and lows, and then you want to kind of mark it off based off of that. So, we have our high here, and then we flipped and we came down and broke below the previous low. So that would make our first lower low, and then we have a lower high, lower low down here at 3, and then a lower high, and followed by what we think to be a lower low at 5. Typically, you need to see a break of the we already have a lower low, I guess, technically, but you want to see a break of the previous low before you can see it continue down. So we did break 3 last week on the close, so we are looking for a continuation down. If you're asking, well, okay, that's great, but why are you targeting that 42 to 45,000? Well, basically what you do when you want to find a target for what wave 4 to wave 5 is going to do, you take the wave 1 and you draw from the high to the first low that was created on wave 1, and then you take that and you run it off of wave 4. That'll take you to a target of around 42 to 45,000, and we say 50,000 level just to be safe, but definitely looking like a drop down there. So it's it's looking like a drop here. So we'll see what happens through the next couple weeks, but that's what we're expecting to happen. We could come back from vacation and be down at that 50,000 level. That'd be the target that we are looking at, and there's math behind it, there's indicators behind it, there's a lot of data behind it. So it's not this crazy levels. It's all set there, and that's why we're looking at that. Could we reverse here? Technically, yes, we could reverse here. So there's a possibility, we reversed here. That's wave 5. We didn't barely even drop below wave 3, but technically we did, and that was kind of the bottom of the market. We're flipping here. How likely are we to bounce here? I would say probably on the lower that would be on my list of lower probability things. You know, we broke below the 200 on the weekly. We broke below 60,000. That was kind of a big fat round number for a long time. So seeing all of that, and then seeing the potential to continue down, that's all you really need to see to know, all right, well, probability is pretty high that we're going to continue down. You know, if I was looking at taking that pretty long-term trade, I would be definitely looking at the downside right now. Again, you know, none of that is for financial advice or anything. We're just here to, for educational purposes only, help you all out, help you all learn a little bit, and hopefully help y'all discover something new, get a new set of eyes on the charts. But yeah, that's kind of our thoughts for the longer time frames. So yeah, we'll see what happens over the next couple weeks as we're gone. Again, we'll be back around the 15th or so. We'll be around the 15th or 16th, depending on how stuff kind of plays out. 16th for sure. If you guys are looking to, you know, just check us out whenever we actually are back, I would say, you know, watch for us on the 16th. 8:30 a.m. CST. We'll be back here live again, talking about the markets after the vacation, kind of going over it. We'll probably talk about vacation a little bit too, and see what's going on. But yeah, overall, just thanks for joining the live stream. Yeah, we will be gone for a little bit, so sorry about that. If you guys wanted to see us throughout the weeks, sorry. Yeah, if we could do it on vacation, we would, but it's not it's hard to figure out, you know, Wi-Fi and you know, setups and mics and stuff like that when you're on vacation without, you know, taking it all there. So yeah, unfortunately we'll just be off for 2 weeks. I guess we'll just be enjoying the vacation, but yeah, good luck to y'all on your chart analysis throughout the next 2 weeks. We'll catch up with you on the 16th again, like I said. So we'd love to see you guys there. Thanks for joining today, and happy trading to y'all. We'll see you then.